the issue here is this, that normal users use Merkley, obviously. But apart from that, the people who do use Merkley to farm, they're very obviously following these certain Twitter personalities who are promoting these projects and writing out like lists. They're like, do this, this, this to make money on this airdrop. The issue here is that industrial industrial Sybil farmers don't use this kind of stuff. They write their own code and they do that randomization. Like they randomize their actions, their times. The decision on how to eliminate those it's a tough one.
Before we get into today's episode, just a quick disclaimer. The views expressed on this podcast by either myself or any guest are their personal views and do not represent the views of any associated organization. Nothing in this episode should be construed or relied upon as financial, technical, tax, legal, or other advice. All right, let's jump into the episode.
What's up, guys? Welcome back to another episode of ZeroX Research. Today, I am joined by Mark, Ryan, and Hayden to talk about what's happening in the markets. It is Monday, the 6th of May. You'll see this on Wednesday, the 8th of May. Let's get to it. This week's biggest happening was definitely FriendTech. They launched a token, finally. Racer decided to bless us. It was kind of a fumble, but not really. Initially, you could only claim 10%, but you had to follow 10 people and join a club to collect the remaining 90%. But they had some back-end issues, so you couldn't do that very easily. I think I created like 30 clubs in the morning because I just kept being like, oh, I want to create a club. It was also like 6 a.m. where I am when it launched. And then eventually you could claim it. I think it peaked there's a wick at 180 for a friend, but then like it peaked at, I would say naturally, like 18 to 20 or something. And there's lots happening on that like front. I feel like it's one of those like really hated coins when it first launched. I think it's like the only actual hated rally that I've seen. I feel like everybody tries to claim something's a hated rally, and it's not. And this one's kind of like, I think, a hated rally. Racer really, he has a tweet. I should have pulled it up before, but I will pull it up while you guys are giving your take. But what do you guys think? Did you end up managing to claim?
I did not try to claim. I didn't participate in FriendTech that much, and when I got to the website, it was like super buggy, so I didn't get much past that. I don't know, like, what's the functionality of the FriendTech token? Like, why does it exist? I'm unclear on that.
So, it's a speculation piece, and like I guess it's like a utility token only in the sense that you can create clubs with it and you can join clubs with it. I think Hayden, I know you might have some more thoughts on this one, but that's as far as I know, that's the only utility that it actually has right now.
Yeah. Right now, what you do with Friend is you can either LP in the Friend ETH pool and earn liquidity mining rewards. I think there's like about 12 million that's going to get distributed to LPs across this whole year. And then the second thing you can do with it, which is more interesting in my opinion, is you could buy club keys with Friend. So if you wanted to, you have there are two types of keys. There's the creator keys, and then there are friend keys or club keys. And so if you wanted to start a club, it could be about Ryan's DPIN lecture club or something. I don't know. I'm just like thinking off the top of my head. People can gain access to that club by spending some amount of Friend to get the key, and that the price of the key to that club is on this bonding curve.
So I also did claim, but what I thought was pretty neat was when you claimed, you had a choice to give 10% or 50% or any custom number to people who owned your keys. And, I was greedy, and I didn't really have much followers. So I just took all. But a couple of the keys that I owned, they decided to distribute all of their keys to holders. So I actually got more airdrop, Friend AirTech, from that. And so I think that's kind of in the spirit of the name, a technology built for friends and the ability to share this airdrop. So that was cool. But, I mean, that FriendTech was one of the apps that I kind of used the most when it now came out, because I thought I kind of had this idea when Uber launched. Uber is democratizing car usage, rideshare, and I thought this was kind of like a good way to democratize knowledge transfer. So I didn't necessarily buy the keys to try and like sell them, buy low, sell high, or any kind of alpha like that. I was trying to get into, chats with people who I thought were very knowledgeable on the space. And then I bought those keys when FriendTech just came out, and I've stayed in those same chat groups ever since, probably owning like one of each key. And it's great because I don't know if I think it's because the people whose keys you own, they know that you paid to buy these keys. So it almost feel, I think that they have an obligation. They feel like they have an obligation to answer your questions. So anytime, I want to ask something in any of these chats, they're relatively quick to respond and give pretty detailed answers. So I've been pretty, pleasantly, happy with FriendTech, the app, long, even during all of the hate and pre the airdrop. I've already gotten my let's just say money's worth from it.
It's funny that you say that, because when I rebooted FriendTech not too long ago to sort of get more involved again, I went to John Charp's chat, and you were the last person who talked with John Charp in the chat, and that's how I discovered you on FriendTech. And it also turns out that John Charb was one of the people who, distributed all of his friend to his key holders, and I think the amount was like 60 friend, which is like, I don't know, it's a decent amount if you think about sharing that amount. So I also distributed, like 10% of my friend to my two holders. And then 5% of the rest after I jumped through the hoops of, setting up a club and following other people. But I 100% agree with you, Mark.
I did not distribute at all. I was very greedy. But I, like Mark, to what you just said, I think that's the ultimate, that's the desired, like, aim of FriendTech, is to have like access to talking to people. I think it would have been like, for example, I was too late for these, but I would have definitely like been happy to buy like a Kobe key or like a Saka key and just ask them about what they think of the market. I never did that, and I was like way too cheap to actually buy it eventually. But I mean, eventually it turned out to just speculation, which makes sense. Since everything in crypto eventually ends up becoming speculation. But then the clubs, I feel like these are a bit more on the. I mean, from people have said that it's like extra speculative, but I feel like it's more just like about creating those chats more often. So I think this is kind of like taking a step back. And I mean, I'm only part of like 2 clubs that I didn't create. I'm part of 32 clubs overall, because I created 30 of them. But I feel like this like goes back to the desired purpose of FriendTech, which is to like create these small niche on-chain communities. I don't think that I will be using Friend a lot, to be honest with you, like FriendTech a lot, just because I think it's a bit difficult to use. It's the UX isn't great. I mean, it's fun. It's definitely fun, but it's not gonna be like Twitter or like an actual social app that I use. But it's, I think, like for what its purpose wants, for what it wants its purpose to be, like the club edition is, I think, fantastic.
Dude, Bach, how desperate were you to claim your friend and dump them if you created 30 clubs?
I mean, you wouldn't believe it. It was like I woke up, no coffee, nothing, just clicking it. The thing is that when I saw it, it was like 8, 9. I was like, yeah, that's about what I wanted. So I would have tried to get out, but I couldn't. And then we'll see how it goes now. I feel like now I'm just like, yeah. The thing is also, like, when it first launched, it was very, very bad. Like, I don't know if you
Yeah.
guys tried to claim it as well, but it was like, the app was very, very buggy, to the point that you couldn't claim, and B, there was no information out about the tokenomics. Like, it was very like hearsay, like rumors. I still, like, I think until 2 days ago, people were like, "Oh, is it 90 mil or is it 120 mil total friend tokens?" And then like we found out about, like, you kind of had to do your own snooping around, go on base scan and stuff to figure out, or like
Yeah.
on Parsec to figure out what the
Yeah.
tokenomics were.
What do
Part
you
of the
guys?
reason why I think it part of the reason why I think it was an interesting it's like an interesting narrative going on in crypto right now. It's because it's on the back of all the drama that we've been seeing with, TGEs with respect to Eigen. And so on one hand, you have all of these airdrop farmers complaining about, the way that these teams are distributing coin. And then FriendTech is kind of just like taking this very sort of, I don't know if it's lackadaisical is the right word, but there's not much information about it. And on the other end, it's 100% community airdropped. Um, and so it's just interesting to see like the timing of this sort of speculative airdrop coin, come on the back of, all this negative sentiment about, token airdrops in general. And it's also notable the rewards on the friend ETH pool is ridiculously high. There was a tweet by 0x Bread Guy, who I think it was over the weekend. It might have been at the end of last week. I don't know. But at the time of the tweet, according to that account, the APY on the pool was about 2,800 APY. And so I don't know how that's going to play out. I mean, that's incredibly high, but it seems like that yield is going to get diluted by more LPs coming into the pool. And if more LPs are coming into the pool, more people are going to be buying friend. So it just seems like a fairly like easy funnel to just kind of like speculate.
Yeah, it's also interesting because it's like, as you said, it's on the back of Eigen and stuff. It's like a more fair launch, but plus it's also like the first instance of Pool 2 that I can remember that has been doing relatively well since I'd say like 2021. Across 2022, 2023, I think Pool 2s in general, like just native token farming, was absolutely destroyed. It was very, very like detrimental if you wanted to do that, apart from like a few instances. But in general, people just kept farming and dumping, which is what is usually done. But I think in 2022, 2020, there's no bid on the farm token, so it was like very difficult. So we'll see if this one works out, but at least it's like kind of like a return to the original, or not original, but less of what has been happening recently.
What's paths forward for this project and like valuation today? I saw that it was trading at 100 million. I know it's seen some price appreciation.
I am not sure what it's at right now. Actually, let me check. It is at 250 mil FTV right now, market cap, which is pretty intense. Especially since Mippo called it on the timeline. I was like, oh, like under this. I don't know. I mean, SocialFi is such an interesting narrative, though. It's like the perfect VC bait. It's, oh, we're like empowering creators and giving like democratizing access to whatever like creative revenues, etc. And Twitter also did this, where they started giving out money to creators. I think this is like an easy narrative for people to latch onto, and it's a lot easier to latch onto than a lot of DeFi narratives. Like, it's difficult to explain to somebody like why eigenlayer is necessary, but it's not difficult to explain FriendTech at all.
It seems from like a relative value and like totally from like a narrative trading perspective that this thing should see a higher valuation in the near term, assuming the bull market continues. I think like from a long-term fundamental perspective, like text-based social platforms have like a very obvious weakness in that they're like the least engaged with and they command the lowest market caps. So like I think Discord saw a $15 billion valuation. Twitter, like it's private now, but it's likely around 20 billion. Like every social media platform has moved to images and then videos, and video is like the core content now. Twitch is even like video first and $45 billion valuation. YouTube's a juggernaut. Again, all the social media platforms have moved away from text only. So, like, my thinking is if this platform is going to move beyond alpha chats, like there needs to be a new kind of they need to move beyond text.
There's tokens.
Tokens.
There's tokens. That's what kind of. So if you're going to draw a comparison, there's like I think right now the comparison that people are drawing currently is FriendTech is kind of like, NFT gated access to Telegram plus Pump.Fun.
Yeah.
In the sense that these club keys are effectively meme coins. Anyone could launch a meme coin or these club keys on FriendTech, and instantly it's unruggable pools, so you don't have to worry about like getting rugged if you're buying any of these club keys, unless of course there's like underlying sort of like tech issues with the FriendTech platform. But everyone's using the same sort of like standard to launch these pools, and it kind of like makes you think that they're kind of just like creating these products into like a funnel, like FriendTech only. So I feel like in the short term, there's probably some upside. I'm not gonna like give price targets. Like I don't really. For me, it's just like something that's fun to. It's fun to like participate in these systems. I think it's like very like crypto native, and it's the exact type of stuff that I like getting involved with. But it'll be interesting to see like, right, over, if once we do get past this like speculative phase, like where things sit, it's kind of unclear at the moment. But if you just look at the meme coin attention that's been, obviously generated over the past few months, plus like how there aren't really many platforms that like have this much of a funnel, I feel like there's, some room for some upside. And
When you buy a key or a club, is 100% of the value? Does 100% of the value go towards the creator? Does it go to the key owner, or does some of the fees transferred somewhere else?
That's a good question. I don't know if you, as a club key holder, you earn any sort of like additional fee from that bonding curve. I don't think so. But there are some like interesting functionalities within the club key feature, which is this concept of you could like hostile takeovers, which is a situation in which someone not even in the club can be voted as the president of the club, and then the president of the club could sort of, they have the ability to make other people mods and silence and mute people. But I don't know of any additional sort of like things that you can do with these clubs other than that, plus chat with other people.
Have there been hostile takeovers?
Yeah. They hostile took over me out of like 5 clubs. Given it was expensive, it was like $1 to do it since I didn't own any keys, but keys. But going back to what Hayden was saying about like how this is kind of fun at this point, I agree. This is like really just fun at this point because it's still a beta product. Like you can't really use it for anything else. And with the like tech social media valuations, I don't even think FriendTech could fit into that because it's too niche. It's still way too niche. In the initial wave, I don't know if you guys remember, but there was like there was an OnlyFans wave at the very, very like first time, and I feel like that was the only non-crypto adoption, even though from what I've understood, like based on that was also like a mix, like a Venn diagram of like OnlyFans people mixed with crypto people as well. So it was still like very crypto native people. There's obviously like very clear places where this could work. That is one of them. There's also, I would say, like in more traditional markets, finance people, I think it could also work. Mostly, as far as I understand, traders, even in like non-crypto markets, they do have small groups on Telegram, etc., where they talk about what they're seeing in the markets, how their trades are performing. And this isn't like paid groups. I mean, like actual just regular traders. They do have like places where because people want to share. So I think those types of people can join it. I'm not sure how like beneficial it would be for like I guess Patreon users can also use this kind of platform. It's just like it's it's a very steep adoption curve. Like you can only do it through FriendTech, and it's the app itself is hard to use. So you're asking people to learn how to use on-chain stuff, and then you're like, oh, but also do it like through something that's not particularly great at this point. Racer, don't cancel me for this. I like the app, man, but it's like it's not very, very great at this point, but we'll see. I mean, I don't think anybody's expecting this to become the next like multi-billion-dollar actual social media platform, but it definitely has like a great narrative at this point.
I think it's definitely served a great proof of concept. Like you could, there's something in the arena of connecting, communicating with others via tokens. I mean, NFTs already doing this with TG. So it'll be, yeah, I agree. And I don't know if this is completely like off the mark. And but do you guys know anything about Ton and how this is sort of similar to that? I don't know much about Ton, but I know there's Telegram and there's tokens involved. So it seems like maybe that could be a potentially like interesting comparison to make.
I don't. It's definitely like I would definitely put Ton in like SocialFi in a sense, but I think it's too big to compare it to FriendTech because the Ton, like Telegram on its own, is one of the biggest social media like presences. I think like us, we use it, and like in regular finance, we use it, but also there are entire countries that only use Ton the same way that only use Telegram. So I think it's difficult to compare. I would say like FriendTech is a bit more comparable to other niche crypto stuff as opposed to like something like Telegram and Ton. But one thing that I actually wanted to talk about today is Fantasy.Top, and I think it's kind of, I don't know if you guys are all familiar with it, but I'll give like a quick rundown for our listeners as well. It's basically like fantasy football, but you have cards, and the cards are influencers or like crypto Twitter personalities, and you basically like trade them based on you basically trade them based on your own valuations, your speculation. Let's say I buy Ryan's card, and I'm like, oh, like I know Ryan's gonna send out some great tweets this week, so I think his price will increase, so I buy his card and then I sell it next week. And you participate in tournaments, and I think they're gonna do like leagues now, but basically cards earn points based on engagements on Twitter. And I feel like this is like FriendTech, but you cut out the conversation aspect at all. This is pure speculation where you're like speculating on CT people and influencers, and I think it's quite fun, to be honest with you. I'm not sure how reliable the application is, so like I didn't look into their audits, etc. at all, so be careful to our listeners. But it is like, previously I always thought that these niche CT games or projects, even like NFT projects, they didn't tend to do very well. But I think like after FriendTech, it's kind of given me this confidence boost that it might be okay, and it's pretty fun to try out. So if anybody hasn't tried it out, I'd recommend checking it out at least.
Wait, so it sounds like a way for creators. It sounds like a way for creators to monetize Twitter engagement via like these sort of like cards that you can buy off Twitter.
It's more like I'm speculating on creators rather than creators are monetizing it. So it's, in that sense, I think it's less valuable than FriendTech because FriendTech gave creators the direct chance to earn more. But this is more of like specifically a game, and yeah, that's it. You just earn based on what you think a Twitter personality will do. And it's just like kind of like a fun. I feel like this is one thing that people always like, because at the end of the day, when you bet on some tokens, let's say you buy X token off the market, you are to an extent betting on the founder. And this is especially in crypto and DeFi, like smaller term DeFi projects, you really are betting on certain founders and like certain individuals and they're like how they are. For example, Do Kwon, I would say like Luna, a lot of Luna was Do Kwon. And this is kind of like really separating that token aspect from it and just tokenizing the individual and saying, oh, like I believe in this guy's engagements and like Twitter personality and him being an influencer. So I'm gonna buy it. It's probably not even like a particularly long lasting project, but I did think it was interesting because it's like the very, very like niche CT influencer. And I feel like a lot of people, we think about this a lot because this like small microcosm, we really know about it. And not a lot of other people do. Like it's very like, there's certain people and how they act. I thought it was just fun that somebody made a whole game about this.
I think it's super interesting that there's a lot of shots on goal with social tokens and SocialFi. I think like it makes a ton of sense. Like if you create these permissionless asset issuance platforms, like people will make tokens of their image and likeness and try to monetize those things. FriendTech, super interesting. Fantasy.Top, also interesting, but I think there's a big problem. Like, are they outsourcing? Like, how do you stop like bots from determining who wins and who loses in these games? Like, there is a major bot problem on Twitter, and like FriendTech to me seems inherently Sybil resistant, right? Like, it's an alpha chat, like the person has to say interesting things and keep you there and want you to buy the token, whereas like we see projects farming engagement all the time with these bot farms. Not an expert on the project, but that seems to be a potential gap for them.
Yeah, I think that's a big issue, and I honestly like don't know how they're going to fix it, especially since Twitter itself hasn't been able to fix it. So I don't think they could. And Twitter's API is very restrictive; it's very expensive. So I'm not sure how Fantasy.Top would even approach doing that. I'm sure they have ways that they're thinking about it. Like I doubt they haven't thought about it, but I haven't seen any like set ways that they were like, "Oh, this is how we're solving the bot issue on Twitter." It'll be interesting to see though.
I mean, they effectively have Elon Musk trying to solve their bot problem. Like that's not a bad position to be in, but the bot problem does exist.
Bach, how are you sort of like thinking about or approaching projects on Blast? Because I just looked up, I was curious, to your point about like you're sort of like buying when it's early on, you're sort of like investing or sort of like kind of speculating on the founders and what they're able to do with any sort of protocol. So I was curious and I looked up Fantasy.Top and I see they're on Blast. Like, do we know who the founders? Like, how are you evaluating projects on Blast in general? I have a lot of friends that like are farming gold and doing all that stuff, but I'm pretty far removed.
I think Blast is probably the most like PvP chain out right now. I think Barra chain will be more PvP. I am just trying out stuff that I find interesting. I always just do that on whatever chain, and I'm usually relatively like risk on, and I will take like pretty. I would say like not great at it with evaluating smart contract risk. So I usually only do like small expeditions, let's say. But in terms of Blast, I think I mean I kind of wish Brick was here because he's the big Blast guy, but I've just been trying out whatever I find is interesting. I usually don't find um DeFi. I just want to see like new DeFi primitives. So I was like, there was like, I don't want to name it now because it hasn't done so well, but there was a couple of GameFi projects that I tried out. They didn't do particularly well. There was a new like lending borrowing primitive. Once again, everybody was like, "Oh, this is gonna be the new Ohm." Was not the new Ohm. Was not the new Olympus. But in general, yeah, that's just all I've been doing. Much like on every other chain, I just try out something new. If it works out, it works out. If it doesn't work out, it doesn't work out. I just cut risk when you're like, this is probably not good. But yeah, I don't know if you guys have been active on Blast, but I feel like there's a lot of TVL on that chain, and I'm surprised they're still doing the points program. But based on what I've seen Pac-Man do in the past, I think he'll do probably like another season of it. I'll see though. It's been going okay so far. I think they have a lot more activity than a lot of other chains. So
I had to support my the ambient team over there, so that's how I'm engaging with Blast.
yeah, that's where Ambient has done a fantastic job of launching on new chains. I think that's a great way to like approach it if you're especially like a new AMM project, and because there's like a big dog that you always have to compete with, which is Uniswap, and they can be a bit bureaucratic and slow to launch on new chains. And I think Ambient's done a fantastic job just launching on these new chains where Uniswap can't maybe launch an official project yet. Moving on, we also had some SUI tokenomics controversy over the weekend. I don't know if you guys saw this, but basically, I mean, this controversy wasn't a huge controversy. It was just like, I think SUI had something like this after they initially launched as well. And basically, people didn't know when the unlock happened. So they had a huge unlock, investor unlock, after their first year cliff. I think it was like a 33% unlock, and it moved like up the circulating supply above 60%. So it was pretty big. And there's like 4 sources on this. It's like Token Unlocks, Crypto Ranks, SUI Vision, and then I guess general Twitter. And all of them show something different. And Token Unlocks was showing that it's supposed to happen at the end of the month, but it apparently happened on the 2nd of May. But according to SUI Vision, it happened like end of April, which I guess is like only a day off. But I feel like this speaks to something larger, which is that we don't have in the industry, we don't have any data. We have some information standardization, but it's more social, and it should be in my like. I don't want centralized authorities to come in and decide on how things can be done, but I do feel like these some chains and some projects should be held more accountable on how they release information. And the worst is when you open up an emission schedule and it's just like they do like 3-month blocks, so I can't tell what date the unlock is, and it's very difficult to find out, especially some of these block scanners. They're hard to read as well. Another issue was that, and this is something that I just want to address, is that people were claiming that 84% of SUI is held by the founders. This I don't think is true, as far as I understand, and it's held by third-party custodians. And this is kind of like a unique situation for SUI because in other proof of stake networks, for example, Solana, there's an infinite supply. Ethereum, there's infinite supply. Like the rewards are issued. But with SUI, there's only 10 billion tokens, and it's held by the foundation, I guess, and that is what is emitted from. So there's like a max supply, and that was something that was happening over the weekend. This is like, as far as I understand, it's like this. But I also don't necessarily trust the SUI team that much anymore because this is like the second instance where people have been slightly burned over their tokenomics and emission schedule.
So is it that the amount held is just being held in a wallet and not being staked, or are they staking it as well?
So it shows that it's staked on SUI Vision and on the SUI block like scanner. But I need to look into this a bit more because I always thought that SUI had an infinite supply and I learned that it doesn't. So I'm not sure how that even really works. Because if it's staked, it should be earning rewards. But the rewards earned by other tokens are paid through that. So I need to figure out how much is actually staked and how much is locked in these centralized custodians, which is I don't condone as a way of doing it. I think things should be done through smart contracts, especially at like the network level, and not through centralized custodians. So yeah, I'm not sure. I really need to look into this a bit more.
Because I think that differentiation is probably where more the controversy lies. Because if it's being staked and they're earning remissions and they're claiming that it's actually locked away, whereas the VCs and teams are still accumulating wealth and governance power because it's a proof of stake network, I think that would definitely degrade my trust in the SUI team a bit more.
Yeah, I think that's kind of become commonplace now, though. Like multiple projects have just given out staked locked tokens, and like Celestia has this, where they like VCs who invested in Celestia, they earn Celestia emissions rewards on their like locked non-vested tokens. So it's pretty interesting that we've kind of let this happen and become like the new standard now. Okay, that's it. We don't like this topic.
I have a meta take that just about standards in general. I think that this is okay, there's controversy around different projects using different standards. Crypto has had some instances in the past that has caused its participants to lose trust in the ecosystem broadly, so that like compounds the problem. However, there are plenty of standards that have just kind of like emerged on the market from participants picking like the best path forward, and it was like a long process, but it was like kind of like worth it. Like this is like gonna be a dated example, but like, do you remember like when there were like two competing music files? It was like MP3 and WMA, and one of them ultimately won out because like people created devices around that favored the MP3 standard over the WMA standard. You can think of like like there was even like there was competitors to like USB ports. There was like lightning devices. I forget what they call them. Like, but the big consequential like service providers in those ecosystems, like they picked a standard. It happens all the time in technology markets, financial markets too. Like there are plenty of different industry classification standards, but like GICS has one out. There are competing ones, and people rarely use them. One tends to dominate. It's just like this process of iteration and like big organizations kind of like planting their flag. So for example, like if a CoinGecko were to say like, hey, if you want to submit circulating supply data, it has to go by this standard, like that would push, I think that that would really push the industry. um, you know, whether you're reporting stake or tokenomics, like big organizations could plant that flag and like really make a difference.
Yeah, I agree. I also think it's difficult because like different projects use different ways of emitting, plus they have just different. But I agree with you. I mean, CoinGecko, as well as like these, I guess, there's other unlock websites like Token Unlock and SUI Vision. I feel like these guys should have checked with each other, like, and they should have. I mean, the issue is that we have a lot of networks and protocols hold a lot more power, I would say, than data providers. So it's going to be a bit difficult for it to move forward. But I agree with you. I feel like this would be something that like socially gets fixed eventually based on how people adopt and who decides on what.
Yeah, and I feel like, I guess like kind of going back to this conversation about, SUI and the token stuff. I feel like um there's just there's always drama about tokens. Um I feel like there was, I remember a similar sentiment early on in Solana's, in Solana's life. So I'm not surprised that these newer protocols are also like going through these problems. And I think that the $10 billion supply cap is actually really interesting, and a really interesting sort of like angle on tokenomics. And Sui and Aptos, we'll see. I mean, their DAG based consensus protocols are really interesting, designs, and they're still very underexplored, and show a lot of promise. And yeah, I mean, Sui's doing a lot of really cool stuff, and Move is starting to gain more traction. I mean, you could do things like sign into, create a wallet, or sign into a wallet, with your Google account because of some sort of zero knowledge proof technology they have. And so I think like most of the time, these token sort of conversations, um, especially when they're negative, aren't really thinking about the right aspects of the space. However, obviously, like no one wants to get dumped on, but I feel like the team is, on their way to really like, make a difference in crypto. So I don't know. I feel like it's kind of a nothing burger.
Yeah, I gotta agree with you. The tech is definitely good. My one worry with the new L1s is that they are not particularly. I don't want to say native because I don't need my like founder to be very very crypto native. I just one worry that I sometimes have is that I don't want them to look down on crypto and just be like, oh, I'm providing something for these people and like they should be grateful. And for them to approach it, I think like the Web2 founder mentality is very different to the Web3 founder mentality, at least like the classic ones. So that's my like only worry with the new L1 chains. But you can never really like know who somebody really is, like just based off some of their actions. It's really like we're gonna have to wait and see. I watched both Evans and his co-founders interviews. They seemed like they really cared about the space, so we'll see how everything goes on. This is just the second instance that they've had, which is why I was a bit worried.
Have you seen the talk at Token 2049 in Dubai when Hasib Quresh at Dragonfly had various L1 founders on the stage, alt L1 founders on the stage? It's a
I
pretty
did not.
cool. It's a pretty
I,
cool panel. I mean, they're all like kind of just like offering their opinions and sort of perspectives on the various chains and the future of the stuff. So
yeah, I should check that out. I saw like a snippet of Raj talking about Emin on it, like about Avalanche and how Emin is a very passionate founder, but I should check that out. That'll be interesting.
Yeah, the most interesting thing around SUI today is I think on May 3rd it hit 800 TPS. I'm not sure what was driving the activity. I know that every once in a while like a new game pops up and it like tests the limits, but that's an impressive metric.
I was actually supposed to talk about this. It's in my notes, but I forgot to mention it. There was a project launched on SUI called Spam SUI, which is why their TPS went off the charts and it beat Solana's one for I think a couple of days. And this was where this controversy like all started out from, because people were like, "Oh, what is this?" And I think we're kind of used to at this point of like certain projects being launched and you don't know who launched it, and they're like launched ahead of a couple of different events, sometimes unlock events, sometimes other events, and they're just like they really boost the protocol's metrics positively. So I think that's where the controversy was launched, because they were like, "Oh, like why did this happen?" And then you look at the dates, and they're like, "Oh, coincidentally, an unlock also happened around this day." So I like obviously I don't know. I don't think this was like a malicious thing, but it is interesting, and you really can't blame them, because we had this like with the inscriptions meta on every single chain, and like I know, and I think a lot of people also know that there's chains that just send back and forth pieces of ETH like through a couple of different addresses to pump metrics. So I don't think that's what happened in this case, but yeah, that's why it beat it. Is what I wanted to say.
Yeah, the important thing, like when you're thinking about things like TPS and the legitimacy of those numbers, the context really matters. It like really matters like what question you're trying to answer. I think the question that anyone who points out this measure today is answering is like, oh, can the system handle a certain load? Not do they have this many real users or this much activity. I don't think anyone's any discerning investor, their head's not there right now for SWI. It's about proving that the system can handle a certain amount of load, and 800 is pretty good. They're probably simple transactions. It's probably not the complex transactions that you're seeing on other networks that have been successful and have a ton of different things going on. But the ability to handle that load is important.
Yeah, I agree. We had another small controversy over the weekend where LayerZero announced they released a statement to counteract Sybiling of the protocol. So they said that users can self-report their Sybil addresses for 15% of their intended allocation. Um, and if they don't report, they potentially receive nothing if their address is flagged by their internal Sybil reporter. Additionally, they also said that bounty hunters will receive 10% of the Sybil's intended allocation. This is the first approach that I've seen that's like this. As far as I know, usually like Hop Protocol ended up hiring Nansen and I think Arkham or like these data providers. I know others have used Gitcoin to do like some human, like to civil out non-humans. I don't think Gitcoin passport is like a good way to do it, but that was what. And this is the first time that I've seen kind of somebody kind of using like a game theoretical way of doing it, where you're like you can report or not report. Um, a lot of people were very upset, especially since they decided to. I think this was like their fault a bit. In an article, they wrote that Merkley, which is a very popular app on LayerZero, like uses LayerZero, they wrote that people who have used Merkley will be disqualified. I don't think that's what they meant, but I think they meant that like if you're using Merkley this way, you'll be disqualified. But they wrote that, and they also wrote if you've just been sending around NFTs, you might be disqualified, which is a large base of like large portion of their user base. Now, this I feel like we talk about this at least whenever I like over the past few weeks, because this is one of my favorite topics to think about. How does this work? Is if LayerZero benefited off of these Sybils for the past year to raise and to pump their metrics and to have like increased volume and activity, how does this how does this work with the users? I personally think that like this approach is quite interesting because it's cool and it's new, and it's I think it'll be interesting to see. At the worst case, it's like a new way of doing it and it doesn't trust Gitcoin passport and stuff. I want what do you guys think?
I think even at 15%, if you get 15% of the intended airdrop, that's probably still worth all of the Sybil. The amount of fees that you probably spend transacting between the layer twos, at least you're going to get something, then at least outright banned. And that's fair. Like you said, you helped pump the valuation and helped LayerZero raise, and then LayerZero is at least willing to give you something for it if you're quote unquote honest with this game theoretical mechanism. And then on top of that, it's the 10%. It's the 10% bounty hunter thing that I love. So instead of like only out, hiring these specific companies, Arkham and these things like you said, now it's open for everybody to become a Sybil hunter. And it's smart that it's less than 10%. Otherwise, less than the 15. Otherwise, you just might identify yourself as one. So I think it's really well thought out, and I will not be surprised if other projects go down the similar route. I I'm not really seeing any real trade-offs to the downside here. So, if you all have any, please let me know. And because if other projects start to copy, then maybe sibling becomes less popular, and then then you can eliminate some of that noise and get a more clearer picture of product market fit.
Is it a fact? So first, totally agree with both you guys. Is it a fact that VCs gave LayerZero money based on these measures? Because I would think that if you're a VC and you understand the crypto space well enough, that a like a kind of like a base layer or low level project, or yeah, like a base layer project like this will experience those Sybil attacks, and like any VC worth their salt should be adjusting those metrics to determine their valuation or like KPIs around the project. I would assume that they're doing the work, but no inside information there.
I don't think that, like, that's obviously, I don't know if LayerZero raised using that or what's up, but I think it's like this general perception. First of all, I don't think that a lot of VCs understand exactly how it works, and this is just based on what I've seen from their takes on Twitter rather than what like they might as well, and they might just be putting on a facade on the timeline. But this wasn't like that part wasn't specific to LayerZero, but it's more so like in general. I feel like some protocols benefit off this, like clearly benefit off this, because it helps them reach that like initial PMF, and like that first couple of months, that's really how you can attract a lot of TVL and a lot of like capital into your protocol, is just through airdrops. Not airdrops, but airdrop teasing, let's say, points programs, etc. Like, because why else? And I guess this is kind of a problem with crypto, is that why that whole idea of like why else would people use it? It's kind of sad, but yeah. So basically, I feel like they have kind of like VCs don't really think about it potentially.
I did see people calling out LayerZero for like promoting these metrics and then like I guess rugging the civils or however. I guess it is like true that you should, if you're going to punish civils in your airdrop, you should also punish the metrics on your explorer, or at least release adjusted measures. It's super hard though, right, for the project, because civils, like, they change their behavior over time in response to like you detecting them, right? So it's like you'll have to, they, like a project, if a project like LayerZero were to be like 100% honest in the, or try to be 100% honest in the metrics that they're putting on their explorer from day one, they have to constantly adjust those metrics, and it's super challenging.
I think to their credit, they didn't shill their token. They didn't have a points program like many of the others, so they weren't teasing the airdrop as much as other projects were. And then to your point, to try and put those adjusted metrics might end up doing more harm than good in the longer term, because as you said, it's a cat and mouse game.
Yeah, uh, just hopping like, I'm not a huge Dune user, but every time I'd go on there, like top dashboards were like LayerZero airdrop token potential for months. Like I feel like crypto was way more concerned with the token than the LayerZero team was.
Yeah, I think that's the case with a lot of these infrastructure projects, where unless like they actively need a token, I don't think they actually want to launch a token, but they just get kind of like adopted by communities following an airdrop. Like if a bridge airdrops a token, or like let's say like a interoperability is a better word. Protocol drops an airdrop, then everybody's like, oh, LayerZero should also have a token. And I think a lot of the worst example of this was with Arkham. Arkham dropped a token, a data product. Why does it need a token? We don't know. And then for months, it was, I actually was talking to like the Parsec team was quite upset about this. And I know the Dune team was also really upset about it because they were like, oh, why am I being like harassed by these airdrop farmers mass creating Dune dashboards and Parsec dashboards trying to get an airdrop when they were like, oh, we're never gonna have a token.
Yeah, the airdrop stuff. I mean, this is like, I think the greater meta here is, I mean, it's a really interesting way to sort of like self-police Sybils. Effectively, is sort of like now the Sybils could PvP each other, right? Like, I'm a Sybil, you're a Sybil. I know that you're a Sybil. I could, report your Sybil and potentially get 15%. And, it creates this like extra dimension to Sybil in a sense, but ultimately reduce it. And I think, though, in my head, and I might be like a hawkish sort of, I might have a hawkish perspective on token airdrops, but I feel like a lot of these problems should be solved on the front end, which is like, if the metric that you're using to sort of like distribute coin can be Sybiled, is it a good metric? And I think those are the kinds of things that I would like to see sort of addressed.
Yeah, it's difficult because I feel like every metric can be simple though. Like every metric is gameable. But I agree with you. If it's like something very, very easily gameable, then the main issue with things like this is that, okay, like for example, taking LayerZero and their recent announcement, they said that if you used Merkley, they didn't mean this, but people assume that they said if you used Merkley, then you're going to be like Sybiled out. Like we're gonna call you out as a Sybil, and we're not gonna give you any tokens. The issue here is this: that normal users use Merkley, obviously, but apart from that, the people who do use Merkley to farm, they're very obviously following these certain Twitter personalities who are promoting these projects and writing out like lists. They're like, do this, this, this to make money on this airdrop. And the issue here is that industrial industrial Sybil farmers don't use this kind of stuff. They write their own code and they do that randomization. Like they randomize their actions, their times, etc. And they specifically only interact with the chain, like through APIs and through code. They're not using any front ends, etc. As far as I understand. So you're not particularly punishing like these mass operations, but you're punishing like, let's say like the lower end of Sybils, where it's like somebody has 4 wallets and they're just like clicking on Merkley and they're like, oh, I'm gonna send $15 from Arbitrum to Ethereum and back, and that's gonna be my transaction for the week. So I never want to be in this spot, because before I think I was very harsh on protocols, but I've been thinking more and more about it, and it's like one of the toughest spots to be is right before you do your airdrop, because it's like it's just so much stress, because you have Sybils. Everybody knows you have Sybils, like you said, Ryan. It's like VCs, any VC worth their salt, they know they have Sybils, but the decision on how to eliminate those it's a tough one. And I think this system is actually like at least relatively interesting, because you're trying out something new and you're not just like trying to randomly take out people. But we'll see how it works out. I know for a fact that people are going to be upset anyway, because they've built up this dream about LayerZero, the LayerZero airdrop, the same way that people built up a dream about the EigenLayer airdrop. People were expecting 6 figures from a protocol which had $18 billion in TVL. Like, what are you expecting, bud? It's not gonna happen. This is like, so I don't know. We'll see. Speaking of LayerZero, now's a good time to get a quick word in from Gas.Zip, thanks to our fantastic sponsor, LayerZero. All right, guys, for this week's LayerZero segment, we have Tom, co-founder of Gas.Zip, a one-stop gas refuel bridge. Thank you for joining us, Tom.
Thanks for having me.
Before we get started, what is the problem that Gas.Zip is trying to solve?
Yeah, so we call Gas.Zip a one-stop gas reload service, right? So if you go to Gas.Zip, it is a fast, cheap, and easy bridge to currently today over about 175 different EVM supported blockchains. So when people are exploring these new chains, and every day there's new L2s and new L3s and et cetera coming out, figuring out actually not only how to get over there, but what is the fee currency they're using for gas, how to acquire that fee currency is a difficult process, particularly for some of these chains on the further end of the more exotic spectrum. So just getting over there to even explore the chain, mint an NFT, do one of these onboarding, participation quests that all these new projects and chains are doing, can be quite difficult to even just get a couple bucks over there sometimes, right? So we built a couple different gas reloader services, one using our own stuff and one using LayerZero, that more or less allows users to bridge small amounts of money to all these new and upcoming and kind of exotic chains very quickly, very cheaply, and in a way where all these chains are in one place for you. You don't have to go out and explore. You don't have to find bridges. You don't have to be clicking random URLs, trying to give people, a trusted source to go and explore kind of all these new chains that are coming out on a daily basis.
Perfect. Yeah, I feel like as every week there's 2 new chains launching. How does LayerZero fit into the protocol?
Yeah, so we built a gas reloader service using LayerZero as well, so all the transactions are unique LayerZero contract interactions, and it's a bulk gas reloader service, so you can essentially bridge to as many destination chains as you would like to on LayerZero with one inbound transaction. So instead of having to go from base to scroll and then Polygon to scroll and then ZK sync back and forth, you could essentially say I have $100 on ZK sync. I want $10 on Arbitrum. I want $10 on base. I want $10 on Polygon, and it will conduct that facilitate that transaction for you. But the gas reloader is built entirely on the LayerZero network. It allows us to communicate between these chains. They have a native gas drop reload service internally into the protocol. It's very quick. It allows people to. It's probably the lowest barrier to entry to using the LayerZero protocol. You don't have to get wrapped stable coins, or you don't have to bridge like significant value with Stargate or something like that. So for people that are looking to just play around with the protocol or also actually use it to top off gas on all these chains, it's kind of a very low barrier to entry to the LayerZero ecosystem, I think, for a lot of users.
Perfect. And I'd love to hear more about what's on the roadmap for Gas.Zip over the next 6 to 12 months.
Yeah, absolutely. Yeah, so LayerZero V2 just came out, as many people have seen. So I think there's a handful of very interesting products that can be built on LayerZero, particularly in the next 6 to 12 months, kind of with V2 rolling out and the expansion to chains at the rate in which they're going. So I think there's going to be a lot of interesting stuff to build on LayerZero, whether that's still a gas reload service, or it's a something more of a swapping or a bridge. I think the LayerZero protocol itself is I think there's still very interesting things that could be built on that. And I think we're just seeing the kind of tip of that. It's stuff like clusters as well too, these kind of cross-chain, state sharing apps. So we're going to be working on building some further LayerZero stuff. We're going to be continuously expanding chains for the normal Gas.Zip. Working on hardening that protocol behind there, and just continuing to add every chain, hopefully the day it comes out, and continue to build on and support other good protocols out there.
Perfect. Thank you so much.
Of course, Ben. Thanks for having me.
All right, we're back. Let's talk a bit about, I guess, more institutional stuff. BlackRock's BUIDL. I know Mark has a take on what's been happening.
Yeah, so last week I was on the train and I noticed that BUIDL, which is BlackRock's tokenized treasury fund, overtook Franklin Templeton zone. And so BUIDL right now is at $380 million US, and Franklin Templeton's FOBXX, I don't know how to pronounce that, is at 367 million. And the thing is, it only took 2 weeks, or maybe a little bit over 2 weeks, after BlackRock launched their tokenized treasuries to overtake Frankling Templeton. I mean, that's interesting, but not necessarily super surprising given the size difference between these two. And Larry Fink, the CEO of BlackRock, has been going on about how he believes in the future of tokenization. It offers advantages that I'm sure all crypto native people know, like faster settlements and greater efficiency, and potentially it's more transparent because it's on chain, and all of these things are great. But I think on their side, I think the reason why these institutions are doing it on their side is really because of the reduced costs. Because these are, for lack of a better term, let's call them programmable databases. And these blockchains help streamline the issuance, they streamline settlement, they make record keeping a lot easier, and they basically reduce a lot of the administrative costs. And I think that's the future of it, because right now that's not necessarily the case, because while it does that, they're still going to be keeping record of these things in traditional systems. You still have to abide by the regulations and have like a transfer agent whose job it is to actually keep record of who owns which assets and stuff. But they're running, I guess, like these two parallel systems side by side, to eventually, the eventual plan is they're going to drop the old financial system, and as the regulations change, I think the new transfer agent will become the public blockchain itself. And so, the fact that within, I think BlackRock launched it in March, we're in May now, the fact that in a couple of months, in a couple of months we might hit $500 million, of in tokenized treasuries, is actually insane. And it makes me wonder, has BlackRock been the catalyst for crypto for 2024 between the ETFs and now the tokenized treasuries? Like, has that been like crypto's number one catalyst this year?
I do. This is a great I think this is a great flag for crypto natives that are more occupied with things like FriendTech, because I agree with you 100%. Like, the institutions slowly moving on board is, in my opinion, sort of like the beginnings of bigger tailwinds if things continue to progress as the institutions want, because these guys move so slowly. And even just being around at some events and whatnot, there's this bubbling it feels like there's this bubbling sort of like attention that these institutions are really trying to capture. So yeah, I don't know at what point this BUIDL fund moves the needle. I don't know if 380 million is a lot in the grand scheme of things. I don't know what the expectation was at this point. But it is really awesome to see these initiatives start to take shape. And in my opinion, it just they're taking on a lot of reputational risk, to a degree, when they decide to deploy something on Ethereum. So even though they're not outright buying ETH, they're effectively taking along on the Ethereum ecosystem if they're going to decide on deploying on mainnet. So I think it just furthers sort of where we can expect the space to go. And I think that the more US dollars that are more available to these on-chain ecosystems, it's just all bullish. It's just really positive. I don't see any negative sort of things that can happen other than the blow-ups.
I will take the other side of this one, just for laughs. I would guess that a very small percentage of allocators to this fund are traditional financial companies who are not already like a crypto native, like a VanEck or something. I'm not saying that I know that they're in it. I don't, but I would imagine that there are very few traditional market financial participants in this fund. I don't think that it's that big of a risk for BlackRock to deploy things on chain, because deploy this fund on chain, because at the end of the day, the treasuries are custodied at BNY Mellon or at or at State Street. There's very little risk. Like, if the fund were to get hacked and these tokenized treasuries were to be in others' hands, like it actually doesn't matter that much. I think that what real world assets, this narrative, it is obviously like good, right? Like net good for the space. Like no one wants to go to a custodian where they can't manage an entire portfolio, right? Like if you can only buy crypto assets with a certain custodian, like it or on a certain platform, like it limits the utility. So having more real world assets on chain, like it's obviously good for the institutions. However, I think that a much better selling point from the industry to traditional market participants is new assets that have unique return streams that these institutions did not have access to before.
Could you
So
give an example? Could you give an example of one, maybe?
yeah. So one example would be gold. So the launch of the gold ETF in the mid 2000s, I believe, was one of the most successful, and it's something that traditional market participants had wanted for a long time, an easy way to trade in and out of gold. Gold is useful to a traditional market participant because all they think about are the Sharpe ratios of their portfolio. Adding an asset should increase the expected return and minimize the expected risk of that portfolio. That is very attractive to a traditional market investor. And you can like look at other classes like reinsurance, for example. Reinsurance has been taken, those products, they're not correlated to traditional assets like equity and fixed income. They've been packaged into mutual funds and sold to investors, and they've been quite successful because they are a unique return stream. Crypto has a bunch of those things. L1 assets are a quantitatively different and diversifying return stream. Meme coins are objectively a quantitative and diversifying return stream. Perpetual contracts allow for different forms of leverage for these funds. Things like Parcel on Solana that allows you to bet on generalized real estate markets. Again, it's a different return stream. Those things to me are going to be the onboarding mechanisms for traditional market investors, not giving them what they already have, but in a different place.
That's very fair, and I do agree with you. But I think the main argument has been and will continue to be the fact that this isn't like T+1 or T+2 settlement, but it's like sub a minute for certain chains, sub a second for other chains. And that's what like has been the main goal for, I mean, if you like, I don't want to quote these things because some of these like research papers aren't particularly well done, but when I was like reading up about real world asset first time last year, I think every single TradFi like, and this like is from like JP Morgan to consulting, like let's say like PwC and stuff, they wrote the exact same like three things. This is like increased liquidity. I don't really agree with that much. I don't think it works very well. But I think the main thing has just been like increased settlement, like decreased settlement time is the main pushing the narrative that they're pushing with regard to on-chain like tokenizing government bonds, debt, security, etc., securities, etc. I agree with you in that it's not like particularly exciting for certain people, but I do see the like just purely from a narrative perspective, it's attractive. It's an easy thing to latch onto, and I see like kind of I guess not U.S. entities, but like non-U.S. slash like let's say developed world institutions, they might be attracted to these types of things because it's like easy access for them on chain. Even though I know like custody risk is a big thing. Yeah.
I would I know everyone wants to chime in. The last point that I'll make is that like if you take the Peter Thiel kind of framework on what it takes for someone to switch on a product, typically it's not like a 50%, like the product being 50% better isn't actually enough reason for someone to make the switch. They actually need a 10x improvement. And like, is going from T+1 or T+2 to T+0, is that going to make traditional financial institutions like jump off the deep end into crypto? Like probably not. Like the costs are already very, very low, and a lot of these custodial relationships are actually free. What they do is they monetize prime brokerage, which is like, so does crypto, right? Crypto monetizes prime brokerage as well. It's the source of a lot of the strength in the recent Coinbase print, right? So, like, I'm not denying that any of it is useful or that there will be a trend toward it over time, but I think it's much less exciting than, oh, the narrative paints it to be.
I do agree again with that, and like I said, all of these improvements with tokenizing assets, with the transparency, the quicker settlement, all of that stuff is nice. But and maybe you're trying to convince investors on that end. But I do think the biggest push is actually on the other side. It's reducing the cost. When these large institutions can reduce the cost of issuing a bond by millions of dollars every year, that and the investor will get the same thing, but the supplier can increase their bottom line just by doing that. And at the end of the day, they might not care what you want. They still have their website. You're going to click a buy bond, and you don't know that it's running a blockchain on the back end. You just know you're getting the same thing, whereas my costs are reduced, which I think is in like the BlackRocks and the Frankling Templeton's mind, the push to tokenize these things.
I'm trying to find some metrics on. So we talked about the supply of BUIDL going up, but I'm wondering if there's any metrics on the utilization of BUIDL. I mean, is that even a thing at this point? Like, are there pools that you could sort of, are there any pools that you could, LP BUIDL?
I don't think so. And like I've seen these tokenized funds before, and like sometimes like in the documentation, it's like you can't trade this thing. Like I've heard pitches for L2s that like are putting LP shares on chain, like limited partnership shares on chain. They're like, you can't do anything with this. Like it's gonna just like lower the cost to issuance, and like it's not a huge unlock, right? Like I don't know the ins and outs of this fund, but I wouldn't be surprised if the LPs are prohibited from trading it.
No, yeah, that's right.
It's
It's not permission in order to transfer it. You need to KYC. There's no interoperability access to DeFi. That is not why people are doing this.
Yeah, it was the same with on those first few products where it was just fully KYC. Like you could only send it to whitelisted entities. You could only receive it receive it if you were whitelisted. Yeah, we can move on to the Coinbase earnings. Ryan, do you want to chat a bit about these?
Totally. So Coinbase reported earnings. Not going to go into too much detail on the numbers, just like from a high level across a number of dimensions. Non-transaction based revenue, new all-time highs for the company. Total volume is at cycle highs and back to 2022 or 2021 highs. Monthly transacting users, cycle highs. Assets held, new all-time highs. Total volume reaching 2021 levels. Volume across customer segments, both at cycle highs, but also reaching 2021 levels. They beat earnings, but the stock was down, not by a ton. So, Coinbase is definitely kind of solidifying themselves as like just like a go-to beta trade for TradFi participants, but also like since the downfall of Binance and FTX, they've really seized the moment. Thoughts?
Has the street been wrong on Coinbase for the past few weeks, or like let's say the past few months?
Yeah, it's complicated. The street, yeah. I think like the average, like the median estimate has been off, but like the stock's reaction has been muted relative to the median estimate. But like all that kind of means to me is that like the analysts in charge on the buy side of covering Coinbase have like really deprioritized it relative to the other things that they're responsible for. Like obviously some people on the sell side are modeling it way better, would be my take.
Was this the I saw a transaction line. I can't remember called other transactions. I can't remember what they call it, but it was basically the revenue from the base sequencer. And I think this was this the first time that they included that in their earnings call?
So they haven't so I only took a look at the 10Q. They barely mentioned base at all actually, and it's not broken out on a separate line item. So there's still some opacity around what exactly, like how it's contributing to their business.
I think that's probably on purpose, and I feel like they'll continue to do that to separate it out as much as possible and to not get in trouble, right? That's what I understand is the reason why they've been doing it. But do you have any other idea why they might not be why they might be so opaque about it?
Yeah, I'm looking at it right now. Look, I think that the big selling point for Coinbase is not the crypto related transaction revenue, but it's really, the onboarding of institutions. Consumer net transaction revenue is up 3x, but the institutional volume is up 4x. The institutional volume, I believe, is kind of near all-time highs, whereas consumers way off. And if you think about kind of the regulatory landscape and just the sex landscape in general, it was Binance and FTX were like really eating their lunch as far as like sophisticated institutional volumes and leverage and in prime brokerage. And I think that's kind of what you want to show off here, because those are really high value clients. Like they're lower margin, but it's much stickier, I think. Whereas consumer, like it's consumer, you get wrecked and you leave the platform. You want those high volume like institutions like on your platform. Like you want to be the place to trade for them. And I don't think that that's what base is for Coinbase today.
It's going to be interesting to see how they continue playing that, as if they decide to launch a token, and how that's going to work out as well, how they're going to try and separate that between, because I will be honest, I am semi ignorant, I say, compared to you guys in terms of like equity, crypto equity especially. It's just something that's never really interested me that much. I think it's because I'm not US, so I never like had access to it, so I never really cared for it that much. But I am wondering how it's going to end up working out when, if let's say a base token launched, how that would work with the coin stock, and how Coinbase would take a step on that, like how they would present that, how they're going to end up presenting. Is it going to be like under Coinbase, or is it going to be something completely decentralized, semi-related to Coinbase, the same way that I'd say Solana was semi-related to FTX back in the day, because FTX was so involved with the ecosystem. Obviously, we found out that Solana survived even after FTX died out, and that I would actually argue that, well, I think a lot of people would argue this. This is a very lukewarm take, but that FTX was net negative for Solana, and that since then it's actually gotten like I'd say like a really good community, a lot of better dApps that are not very, very extracting and ruining of retail. So I think it'll be, and I also know a couple of other exchanges are also now looking into launching, and they've already launched L2s. So I'm excited to see how they're going to separate these products out.
Personally, I would love if they never launch a token. I would just like crypto to see that not everything needs a token. Maybe they can do some crypto economic or cryptographic principles around the sequencer to kind of like make it permissionless as possible without introducing that token to quote unquote decentralize it. But it would be great if people could launch useful products that are profitable, that don't need a speculative token.
I feel like Ryan would also take this same path, because I saw a couple of his messages last week in the work chat. But I'm always like, as many tokens as possible. I think the whole point of crypto is tokens, and so I'm happy with more tokens. But I like with Base and Coinbase, you actually probably don't need token, just because of the way that it works. So I agree. I mean, I guess it'd be interesting to see how it would work out, especially since it would, I think, be better for optimism, since I feel like optimism is not particularly benefiting off these OP stack chains. So we'll see how that whole thing works out as well. That could be a topic that we should talk about next week, maybe. But
I'm going to add something to the whole point of crypto is tokens. the whole point of crypto is tokens and coordination. So when these projects could figure out a way to have a token where everyone involved has, aligned incentives, then okay, yeah, that'd be, every project with a token out there is trying to solve this problem. So that's the one thing I'll add to that.
Yeah, I agree. I agree mostly with these takes, but like surprise, surprise, I do think that Base should have a token. I think they will have a token one day.
You're
Like,
just fading all of it. You're just fading all of our thoughts on what you think.
no, yeah. So they, if Coinbase is interested in maximizing their value capture and for themselves and their investors, like the token is the obvious way to go, right? Because then you get the upside of the profits from the chain, and then you get some capital appreciation there. I think that they will over time when the regulatory landscape improves, and because it's what makes economic sense, and very rarely do things make like cease to make economic sense for too long. Like eventually those things correct themselves. So barring any like regulatory craziness, if we keep going the direction that we're going in, which is like um, an improving regulatory environment for Coinbase to operate in, like there's going to be a base token, like there has to be. And I feel like with public comments, like they've been very qualified in their answers. They're like, no, we won't have a token in 2024, which, doesn't answer 25 and 26, right? So, yeah, I think one's coming. It's just gonna take time.
I do agree. I do think one is coming. I don't want one to come. But then for that economic that equation is the upside of that base token going to outweigh keeping 100% of the sequencer profits, right? How much does that do towards your DCF versus whatever potential capital gains on the base token, which is good now because of the accounting change rules on unrealized crypto assets. So could benefit them on there as well.
A base token would be wild. That would be wild.
I think we're good. I think we had a great conversation. This was probably my favorite analyst roundtable in a while. So I thank you guys for hopping on and for giving your takes. Thank you to our listeners for listening. Have a good day.